Hey guys, welcome back to the channel. Today's video, we're going to be talking about the inflation breakdown for March of 2023. Now, overall, when it comes to April, we do get all of our March numbers. So I wanted to cover this and kind of show the direction that we're trending in within the video. So let's go ahead and we'll break it down. The consumer price index eased to 5% in March of 2023. On an annual basis, that is down from 6% in February, so a full 1% reduction based on the US Bureau of Labor Statistics and their inflation report. Now, energy, food prices declined in March, which is good news, guys. We know energy and food was skyrocketing over the last couple months. Housing prices have proven to be stubborn, but they are expected to fall within the next couple months. Inflation for physical goods has largely eased. That is, again, one of the big things. When you look at your pocketbook, when you look at the amount on credit cards, when you look at what Americans are borrowing, it has been absolutely crazy to see the sticker shock when you're looking at vehicles, when you're buying any larger ticket items. Not only that, is coupled with a higher rate. So some of the best rates we're seeing in the nation are 6, 7, 8% on auto loans. Even looking at mortgages range from 6 to 8% depending on the institution, making it a lot more expensive to buy things every day. And of course, the physical goods, when you're looking at gasoline, when you're buying fuel, when you're looking at a bunch of different things, it is more expensive overall, guys. Now, banking turmoil is expected to cool the economy and inflation in the couple months, which is kind of funny because Jerome Powell, Papa Powell, was talking about the banking related reason, and that is the logic behind why we might see a recession, or because of the issues that we've had within the banking industry, that is going to drive us into a recession, which again seems kind of increasingly unlikely. It seems like the recession might not happen, or might not be as bad as we think, or might not even happen at all. Might be a growth recession. Only time will tell. Inflation continues to retreat in March, which is awesome. Energy prices pulling back. They really spiked when Russia invaded Ukraine. Big shout out and love to you guys that are over there. You know, it's an absolute horrible situation, but that spiked oil prices worldwide, guys, when a lot of institutions started not receiving oil from Russia, spiked a lot of things. Gasoline and energy, other energy have started going down. So I'm going to go through just a quick list of a couple things that are still incredibly high. If you look at the cost of eggs, margarine, vegetable oil, you're looking at a 20% increase in price. 30% on margarine, 36% on eggs. That is right, guys. Eggs are still astronomically expensive. Airfares up 17%. Motor vehicle repairs 17%. Bread, food from vending machines, motor vehicles, electricity, all up 10% plus, guys. And chicken, which again is kind of interesting, up almost 9%. So when you think about it, big picture, we have eggs, we have margarine, we have vegetables, we have chicken, we have bread. A lot of the regular basic things that people buy are up considerably, including restaurant prices. Food away from home is up 9%, guys, which is incredible. Rent still the exact same. Rent is still up 9%. But looking at some of the things that have down, that we've actually seen a down kind of tick, roast beef, bacon, computers, and also when it comes to the energy market, when you look at cars, truck rentals, when you look at appliances, health insurance, used cars and trucks are actually down dramatically, almost 12% reduction in used cars and trucks. Televisions down 14%, and gasoline down 18%. So again, when you look at, them increasing the interest rates, the Fed's fund rate, it is working, guys. Systematically, this is what we're really driving towards, is as rates continue to go up, the price of goods and services will go down with the demand going down. Now, this is still incredibly painful for a lot of people, but when inflation was almost 9%, things were just out of control when it came to the price of goods and services. So what really drove up the inflation is March. Notable inflation driver for March was really shelter. When you look at rent, when you look at houses, still up almost 8%, accounting for over 60% of the total price increase in consumers, which again, comprised of volatile energy and food. That is right, guys. Almost 60% of the total increase we've seen can be attributed to energy and food, which is kind of crazy When you look at vehicle insurance, household furnishings, recreation, all up 5% plus, which again is very, very expensive. So to compare the average gas prices of $3.54 in March, that they've kind of come down quite a bit, where we've seen them over almost at $5, if not more, here in the United States, which again, if you look at the pocketbook, if you're a person who travels for work, hopefully it's remote work that you don't have to pay the gas prices. But if you are traveling for work, guys, the cost of goods and services, again, have been huge. It has really been huge. Same with rent. We did a video on the increase in rent. I have seen people go from $500, $550 a month for rent, which is relatively cheap, to $900, $1,000, $1,100, even seeing one bedrooms in Michigan, which is kind of crazy, at $1,400 for rent. That is more than my mortgage, which again is kind of astronomical that the price is that high. So why has inflation kind of increased, and why does it continue to remain high? It is really the consumer demand, guys. That is one of the biggest things, is if we quit buying a lot of things, it would go down, inflation would go down faster, but the demand is still there, the money is still there. Now, the only thing that really, the pent-up demand for dining out, entertainment, vacations, is how are you financing this and how are you funding this? And that is fundamentally what we do cover on this channel, guys, trying to get you in a better financial position. If you're going on a vacation, hopefully you saved up money, you budgeted for it, you have that money set aside, because again, airline fares up roughly 17%, which is kind of crazy to think, but people are still buying them. People are still booking flights. Kind of coupled with that, it seems like there is a pilot shortage. It seems like there is plane delays. It seems like there's a lot of stuff going on in that industry that really does affect what is happening. Again, the bigger picture. So make sure, again, that you're not borrowing, that you're not putting your entire vacations on credit cards. I see a lot of debt spending that is based on, hey, I want to go to Florida. I need $10,000. I'm borrowing $10,000. I want to get married. Hey, I need $15,000 for a wedding. Borrowing $15,000. With the rates that they currently are today, 9, 10, 11%, even on personal loans, $15,000 you're borrowing could end up being $20,000, $22,000 when you pay it back, depending on the rate and the term that you're taking it out for. So you really have to take a hard look on what you can cut, where you can save money, how much you can save to really justify what you're doing. I know there is a lot of, not really entitlement, but the things you do want to cover, the way you want things to specifically be, but most of those do come with a very, very big price tag. Even if you're looking at tickets getting into, Universal Studios, Disneyland, Cedar Point, whatever it is, guys, the prices of those tickets are much, much higher, which means people are either, one, spending less in other places, which usually is not the case, or two, they're just supplementing all of their income with credit card debt, which is going to have a huge factor. We are almost to $1 trillion in credit card debt in the United States, guys. That is right, 1 trillion with a T. When it comes to the credit card debt, I do not want you to be a statistic, guys. I do not want you to be the one that is borrowing to do everything in your life. Eliminate the debt, have the ability to save money and actually pay for things that come up within your life and within, the future. Planning is very key. All right, guys, so that'll do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.